Market analysis, corporate investment, and economic transformation. The Trump presidency has emerged as a powerful force propelling financial markets forward, with recent corporate announcements serving as compelling evidence of this influence. The most striking example came when Apple announced a new $100 billion commitment to expand its operations in the United States, with the company's total U.S. commitment now reaching $600 billion over 4 years. The symbolic weight of Tim Cook appearing alongside the president to make this declaration cannot be understated. It represents a fundamental shift in how major corporations view domestic investment and manufacturing strategies. This announcement extends far beyond mere political theater. It reflects a genuine transformation in corporate America's approach to production and supply chain management. The decision to dramatically increase domestic manufacturing capabilities demonstrates a recognition that geopolitical stability and supply chain resilience have become as important as cost optimization. Companies are now weighing the long term strategic benefits of domestic production against the traditional advantages of offshore manufacturing. From a market perspective, the technical indicators present a mixed but intriguing picture. While equity markets have shown impressive strength, with the S&P 500 approaching historically significant levels, the underlying market structure reveals ongoing rotational activity that suggests investor uncertainty about sector leadership. The persistence of buying interest on market dips indicates that institutional confidence remains intact even as short term momentum appears somewhat fragmented across different market segments. The scale of capital commitments flowing into American manufacturing and infrastructure is genuinely remarkable. Beyond Apple's massive pledge, numerous other major corporations have announced substantial domestic investment plans, creating a wave of economic activity that could reshape the competitive landscape for years to come. This represents a dramatic departure from decades of globalization trends and suggests a new paradigm where domestic production capabilities are viewed as strategic assets rather than cost centers. These investment flows are likely to generate significant productivity improvements, although the full impact may not become apparent until late 2025 or 2026. The integration of advanced manufacturing technologies, artificial intelligence, and domestic supply chains creates the potential for substantial efficiency gains that could drive economic growth well beyond current projections. The implications extend globally, as increased American productivity could shift competitive dynamics across multiple industries. The debt to GDP outlook appears increasingly favorable under these scenarios. Enhanced economic growth, combined with strategic policy implementations, suggests that fiscal metrics may improve more rapidly than many analysts anticipate. This contrasts sharply with more pessimistic assessments that rely heavily on historical precedents and cyclical patterns that may no longer apply to the current economic environment. Traditional economic forecasting models often fail to account for the transformative potential of technological advancement combined with coordinated policy initiatives. The current situation represents a unique convergence of corporate willingness to invest, supportive regulatory frameworks, and technological capabilities that could generate outcomes that exceed historical benchmarks. Attempting to predict future performance based solely on past cycles may overlook the genuinely unprecedented nature of these developments. The market psychology surrounding these announcements is equally significant. Corporate leaders making substantial long term commitments to domestic investment creates a virtuous cycle of confidence that extends throughout the business community. International investors are taking notice of this stability and growth potential, leading to sustained capital inflows that support both equity markets and currency strength. Supply chain resilience has evolved from a business optimization consideration to a national security imperative. The vulnerabilities exposed during recent global disruptions have fundamentally altered how companies evaluate production strategies. The shift toward domestic manufacturing addresses these concerns while simultaneously creating the foundation for more reliable and controllable production processes. The technological sector's embrace of American manufacturing could catalyze similar moves across other industries. When a company of Apple's stature makes such commitments, it signals to suppliers, competitors, and complementary businesses that domestic production is not only viable, but strategically advantageous. This could trigger a cascade of investment decisions that multiply the economic impact far beyond the initial announcements. Looking forward, the convergence of technological innovation, supportive policies, and corporate commitment creates an environment primed for sustained economic expansion. Unlike previous growth cycles driven primarily by monetary policy or speculative activity, this expansion appears grounded in fundamental productive capacity improvements. The integration of artificial intelligence, advanced manufacturing techniques, and resilient supply chains create the potential for substantial efficiency gains that could establish American economic leadership for the coming decade and beyond.